All right, morning everyone. Thank you for joining us for Phillip Securities morning webinar today. Okay, so today we'll be talking about a few counters, CMT and CCT, Prime US REIT, SATS, and Clearbridge. And then we also have some macro and sector outlook with SG banking, bond, technical outlook, Singapore weekly, and some other Phillip on the ground. So before we begin, I'd just like to note that for today's session, we'll be trying to do it slightly differently. So we will be, okay, so for any questions, right, continue to put it in the Q&A section, but then do note that there will be a voting function, so you can actually vote for which questions you would like to be answered, and we will answer the questions based on the highest vote to the lowest vote. Yeah, so as long as if there's any time constraints, so if there isn't any time constraints, of course we'll try to answer all the questions when possible. Okay, so without further ado, let us begin. Okay, so first up, we'll be talking about the bank's update. I think this is by just so last week, I think there were a few questions asking about the scrip dividend election. So based on MAS guidelines provided at the end of July, we know that the banks are to allow investors to opt for scrip dividends for the dividends to be paid out by the banks over the next 1 year, which is for those of you who don't know, this is to allow you to receive your dividends in the form of shares, rather than cash. So for shares held with the CDP, you are actually expected to receive your election form in your mailbox soon. And on the form, you should have the following options. So there will be 3 options on the form, regardless of which bank should be the same. First of all, is to receive your dividends in cash. And secondly, is to receive your dividends in shares for this time round only, or to opt for your dividends to receive your dividends in shares every single time in the future. So for the purpose of today's sharing, I'll just be talking about option 1 and 2. So we won't be talking about the shares in the future, because as long as you are a supporter of the banks, of course, you will try to opt for shares in the future. So on the bottom right, we can see that there's a table which shows as estimated what's the forward 1 year dividends for the respective 3 banks, and for the second quarter and first half dividends that they are announcing this time round as well. But the important thing to note this time round is that there is a period on the last column, basically is the period of election. So over the next 1 year, because DBS has actually given out dividends for its first quarter of financial year 2020, they need to provide for scrip dividend election for each of the quarter for the next four quarters. So from the second quarter to the first quarter of financial year 2021. So OCBC and OUOB will just be for the entire financial year 2020. Okay, so what I did was I took all the information that is required to put it into a table format so they can easily refer to it. Then the important thing is to note next. So we can see on the screen, I actually put it out in a red box. That is whether the subscription price that will be allowed for you to subscribe to the dividends will be actually a premium or a discount to the last done price. So based on this morning's one, I actually did the last done price based on last Friday's closing price itself. So if it's a positive number, you're actually electing your share dividend at a premium, which is not good. It means that you can actually just buy it off the market at a lower price. So based on last Friday's closing price, we can see that for DBS, it's actually a premium. So I wouldn't advise you guys to opt for the share election, because it is going to be, you can just buy it off the market at a lower price. And the next important date is to know when you need to elect, make your option buy. So that's the next row. You can see the election date between 11 September to 22nd September across the 3 banks. So you need to make sure that if you wish to elect shares, you make your decision known to CDP by then. Basically, it's a reply envelope to CDP. And the remarks is to see actually, because of the rounding effect, if you are actually entitled to partial shares, whether it is round up or round down. For DBS and UOB, they will be rounded to the nearest share. So there is a possibility for you to get a rounded down number. Whereas for OCBC, they will always round up for you. So in a sense, it is always better to choose the shares. Like in a sense, you'll have some savings But yeah, the savings only in a partial share. So in the second table, the lower table, you can see what I actually did was I put an example to illustrate how many shares you might be getting. So across 100 shares, 500 shares, or 1,000 shares. What I did was you can see on the yellow box, right? There is actually a box where I can key in whatever I want and see how many shares I am entitled to. So if I put in 2,000 shares, for example, you can actually see that if you have 2,000 shares of DBS, you'll be actually entitled to 17 shares of 17 extra shares if you would take your $360 in dividend and use it to reinvest. And the second row you'll see is round down. So by right is 17 point something. Just that in this case, because there's a rounding down, you'll be rounded down. So what I noticed when I tried out different numbers was that for UOB, as long as you are not holding any odd lot shares, so in multiples of 100, it is always a rounded up. And for OCBC, it is always a round up anyway. So for OCBC and UOB, you don't have to worry whether there's a round down effect for you. But for DBS, based on your shareholdings, you might need to check. And for that, next, yeah, I actually created a Google document where you can actually access this link. I'll just post this link shortly in the chat after the whole webinar is over, and you can go in. You will be able to edit only the yellow box of the Excel sheet. And what you can do is for yourself, if you key in the number of shareholdings that you have for the banks, you can actually see how much eligible share you should be getting, which will also be enclosed in the form given. So when you receive the form by them, you also know that how much share you will be getting. But this is just for you if you are curious while waiting for the form. Yeah, you can actually do that. And that's it for me. Generally, what I feel is that for OCBC, it is always a good thing to opt for the script lah. And for UOB, there's not much difference. But currently, because of the price of DBS, it might be better to just buy it off the market. Yeah, thank you.
Hi, good morning, everyone. So today I'll talk about the proposed merger between CapitaLand Mall Trust and CapitaLand Commercial Trust. So this is just a quick recap on the deal. So the deal is for CMT to acquire all the paid up shares of CCT. So CMT will be the acquirer. And the new entity formed will be called CapitaLand Integrated Commercial Trust, CICT for short. So a quick recap on the deal mechanics. One CCT share will be, the purchase consideration will be for 0.72 CMT shares, as well as a cash component of 25.9 cents. So if you do a quick calculation based on CMT's closing price on Friday, which was $1.90, one CCT share, the implied value based on this exchange ratio and the cash component would be about $1.62.7. And this compares to the actual closing price of CCT on Friday, which is 1.64. So this is actually, the implied value is actually very similar to the closing price, the traded price of CCT. So meaning to say that in a way, the proposed merger has been already priced in. So for the sake of completion, if you are a CMT unit holder, before the merger, you will have one share, and after the merger, you will still have one share. This is a recap on the timeline for the proposed merger. So the merger was announced on the 22nd of January, and the EGM, where the unit holders will vote in favor or against the merger, was supposed to take place in May 2020. However, due to COVID-19, etc., the EGM was delayed, and currently there has been no new EGM date announced. The long stop date for this proposed merger is on the 30th of September. So we're currently about 1 month away from this long stop date. So by the long stop date, the EGM must have happened, and the votes in favor or against the merger should have taken place. And because there's a minimum 21-day notice period for the EGM, we need to hear the announcement from the companies by the 9th of September. If there's no announcement by the 9th of September, then the EGM cannot move forward, and therefore that means to say that the proposed merger cannot take place. So this is a quick recap on our calls for CMT and CCT respectively. For CMT, we have a buy call. CCT is an accumulate call. our calls are actually based on total return. So by a general rule of thumb, if the total returns is greater than 20%, our call is a buy, and if it's between 5 to 15%, it will be an accumulate call. But due to the movement of prices since the publish of our report, CMT's total return is 28.3 and CCT's total return is 21.1%. Okay, so if in scenario one, if you are of the view that the merger will take place, then we would suggest to buy CMT. So if you can see in our table, the DPU yield for CMT is slightly higher at about 2.1%, and this compares to CCT's the DPU yield for the cleanup dividends, which is basically we are assuming that the cleanup dividends is for the period of the third quarter, meaning the period ended 30th September. So the DPU yield for CMT is higher compared to CCT. And we would say to buy CMT because the DPU is higher. However, the investor will need to assume the risk related to the retail sector. And another advantage of buying CMT, if you would like to have holdings in CICT, is that you will not be exposed to any outlot risk. So in the second scenario, if you have the view that the merger will not take place, then you should buy CCT. So the graph below actually shows you the price recovery of the commercial REITs, or rather CCT's close comparables. So we are comparing CCT against Capital REIT, Suntec REIT, OUE CT. And for CCT, the percentage of assets in office assets is 81%, K-REIT 100%, Suntec REIT 83%, and OUE CT is 63%. So as you can see, currently CCT, the red line, used to be trading above all the other comparable REITs. However, post-crash and post the merger announcement, CCT is currently trading below K-REIT. Yeah. So we think that we have the view that we should buy CCT if you think the merger would not take place. First of all, due to the resilience of the office asset classes, especially in this COVID-19 environment, you know that the least affected is industrial, followed by the office asset sector. And second of all, investors may actually prefer CCT due to the desirability of an office pure play REIT. And there's also upside potential once CCT shares are unpacked from CMT share price. Yeah, because currently now CCT shares are more or less trading in tandem with CMT's shares due to the exchange ratio as well as the cash component. So today, CMT actually announced that they have received the in-principle approval of listing of 2,008 million share, so 2,800 million share new units of CMT. So this is this new listing is actually for partial payment for the merger. So that's all for me. I'll pass the time on to Jie-Hui for Prime.
We had a webinar last Wednesday for Prime US REIT, and we would like to reiterate our call as to why we prefer the counter. So just some points to note. Prime US REIT saw minimal impact amidst COVID. Firstly, their rental collections are at 99% throughout Q2 of 2020. Secondly, no rent abatements were given. Only rent deferrals were provided to 8 of their small retail tenants, which contribute 0.2% to their cash rental income. Thirdly, most of the leases do not have pre-termination clauses, so tenants will need to pay a large penalty in the case of a lease break. In terms of results, they outperformed forecast. Their DPU exceeded forecast by 5.1%. Next, please. We also like that there's high income visibility and stability in Prime's portfolio. This is supported by a long portfolio WALE of 4.8 years with minimal expiries and high levels of diversification. There were some questions regarding WeWork, so I'll just elaborate a bit more. WeWork is their largest co-working operator, and it contributes about 2.4% to their gross rental income. WeWork paid their rents in Q2 and is still paying their rents. In the worst case scenario, should they default, Prime holds a letter of credit amounting to 8 months of WeWork's rent. Therefore, Prime sees no issues regarding rent payment for WeWork. Next, please. enterprise gearing level stands at 33%, with 91 million available undrawn facility to tap on for future growth opportunities. They did mention that they do not have a specific timeline in mind, but they will continue to look out for good opportunities on the market. Next. In terms of market outlook, commercial supply coming into the market is low, as majority of the upcoming supply is pre-leased already. Despite COVID-19, Prime still saw robust leasing activity in 1H 20, which spilled over to 3Q 20. Therefore, we maintain a buy with a target price of 94 cents. Our forward dividend yield for the counter is 8.6%. That's all from me. I'll pass my time on to Timothy.
Thanks, Jie-Hui. So just a short update on the bonds market. Okay, after the Kansas Symposium for the Fed policy review, after Jerome Powell actually announced new changes to the Fed interest rate policies, after those comments, it actually affected the interest rates in the US and also in Singapore. So from now onwards, the Fed will be more accommodating for higher inflation. So they'll be looking at the average inflation rather than their usual target of 2%. So they'll look at the average amongst a span of years instead of just a target of 2%. So even if inflation overshoots their 2% target, right, they will still consider the average inflation over the years. So which has been lower than 2% already for a while. So what that means is that the Fed actually expect higher inflation moving forward. And so in response to this, the longer term interest rates, which you can see on the graph on the left, the blue line and the red line. The blue line is the 10 years Singapore government securities yield, and the red line is the 5 years. So it actually rose sharply in response to this. Because the reason is because people want to be compensated for higher inflation affecting their returns. So moving forward, we may see bonds in the longer tenors, particularly between maybe 5 to 10 years and longer, could see underperformance in response to these higher interest rates. So we expect longer term interest rates to continue to rise as inflation increases, while short-term rates to remain low as the Fed holds them near zero. So on the chart on the right, you see bond prices in Singapore remain flat for the previous week. It didn't really rise in response to the Fed symposium. Okay, bond valuations in Asia remain mixed. So on the chart on the left, it shows the investment grade bonds valuation. So in investment grade, meaning that those better companies, then the yields are a bit lower. So those bonds are trading more expensive than the 10-year average, which is the green line. So currently now it's below the green line. So it's slightly more expensive than the average. Whereas for the higher yield bonds on the right, we can see that it's still trading quite above the 10-year average. So it's cheaper than the 10-year average so far. So we are still seeing high demand for the higher yield bonds and rather stagnant demand for the investment grade bonds so far. Okay, so we'll just do a short update now on the issuers in our bond recommendations list, which we just launched a couple of weeks back. For the week previously, last week, Thomson Medical and ESR Cayman released their results. So for Thomson Medical, they suffered weaker revenues, which was expected due to lower patient loads from the COVID-19 restrictions. So because the non-essential healthcare services was restricted during that time. So EBIT actually came at a loss of 90 million due to one-off impairment losses on their land in Malaysia. And due to this, and consequently because of this, the gearing increased from 0.91 times to 1.2 times. And they also issued a net debt of 71 million for the period. But the liquidity is still strong. Cash is able to cover short-term debt by 29 times because the short-term debt is pretty low. So we expect gradual lifting of operating performance as the restrictions are lifted. For ESR Cayman, because they're heavily in the logistics sector, they actually benefited from growing e-commerce demand. So they posted very resilient first half 20 results. So revenues grew 26.9% year on year, which is a high growth, which is on par on the growth that they had in previous years. And EBIT margins increased from 26.1% to 48.2% in first half, due to lower admin expenses. So gearing remains stable also at 42.4%. It decreased at 43.1%, sorry. So it increased slightly, still stable at around that level. And liquidity is still quite high, with cash being able to cover short-term debt borrowings of 1.64 times. So for these two bonds, we remain attractive on these two bonds of these two issuers. So that for the Thomson Medical, it will be the 4.8%, maturity date 2022, and ESR Cayman 5.1%, maturity 2025. Okay, thank you.
Okay, thank you, Timothy. So for today, I'll go through the STI technical outlook and then a few stocks counter later on. All right, so for the STI, we look at the weekly chart. We are still on the downside because first, the wave theories has already indicated that we are on the downside move, and then we will be targeting the lower bound of the at around 2,000 to 2,250 should 2,005 be broken. So currently, as of now, I think STI is still ranging above the let me check. So currently STI has a downside, even though it still stays above 2,500, but I think that 2,500 will be broken soon. All right, next slide, please. All right, so if you look at the daily chart, the daily chart is a very strong indication of a bearish downtrend. First, if you look at the prices has been trending below the 50 and 200 SMA, and then another thing is it broke out a bearish flag, and then the next one, the most important one is as we are approaching 205, and then the 205 level, if you can see closely, it has been tested multiple times. So once the support that is being tested multiple times, it generally get weakened, and so we believe that price will immediately go to 204 and then have a slight rebound, and then after that carry on the downside to 202 to 203. So what's a bullish scenario then? So if the bullish scenario will happen when prices actually break up strongly at 2620, all right, which is a 61.8% retracement level. However, that will be another obstacle because there's a potential resistance zone 1 at 2007 to 2008. All right, next slide, please. So for the COVID-19, the darling stock, I'll pick up two stock, Top Glove and then Riverstone. So if we look at Riverstone, we can see that the wave 3 of the intermediate movement has been completed. So currently after wave 3, normally we will be setting a wave 4. So wave 4, you can see that they are highlighted on the box that actually is very corrective right now. So then there will be upside, but I think the upside will be capped at $4.50, and then after that there will be a correction until $3.50 to $3.30 before a rebound. That's my view for now, unless Riverstone break above $4.80, and then we can see that, then definitely we can see wave 5 going all the way to $5.50. Okay, so next one. So for Top Glove, Top Glove so easier. Although Top Glove there is some bullish upside, but I think that $9 is going to be a major resistance in the near term. All right, so if $9 breaks, then we can see that price will immediately target $10, and then once price reach $10, then we correction. But I think that for now, I think price will less likely to break $9, and then price will likely correct itself back to the $7, and then from there then we form a wave 5. All right, so I mean a new wave, a new sub wave. So for the 1, 2, 3, 4, 5 that you can see that has been bracketed, that is actually the primary phase. So once the primary phase is over, then we are looking at the cycle phase, and then if $7 managed to be rebounded, then we can see that Top Glove will actually go beyond $10. If not, then we'll see at $5. So $5.50 is also another potential rebound area. So I'll be updating on Wilmar, AEM Holding, and Sheng Siong Group. So for AEM Holdings actually is after I issued a sell call last week. I think the stock is consolidating now. So we kind of don't know where the stock will actually break towards. So there's a theory is that I think $4.50 is going to be the very grand resistance, which is also the 1.618 of the bullish flag. All right. But however, should price break below $4, and then we can see that $3.40 will be the immediate testing, be the immediate rebound support level for that. So for Wilmar actually quite disappointing after last week. It actually gaps down, a very strong gap down after one of the major shareholders decided to unload all and sell its assets and bonds in Wilmar. So but although I did say before that if price managed to stay supported at 4.37 to 4.38, I think we will see an upside. But as the days goes by last week, you can see that actually Wilmar has been very lacking in the what do you call it? The bullish momentum. So first thing, price has been consolidating below the uptrend line. That's first. And then last Friday, although it did have a bullish upside in the first half of the session, in the first half of the trading session, means during the morning period before lunch. But subsequently after lunch, it has a great sell down, and it forms a shooting star below the uptrend line and then also below the lower bound of the breakaway gap. So normally breakaway gap, there's two characteristic. First, there's always high volume company, and then after that subsequently be low volume. And then you can see the consolidating represent a low volume, and it may actually it may be the corrective pattern of the bigger bearish trend. So next one is normally breakaway gap signify the new trend ahead. It may be corrective, but let's see the support zone 1 or support zone 2 highlighted in the chart will be holding or not. All right. So for Wilmar, we need more data to know where is the exact buying price. So this will be the last stock that I'll be doing. So for Sheng Siong, actually, I did a buy call on after there's a tweezer pattern, which is highlighted in point A, which is ABC of the corrective wave. But the failure to close above $1.80 subsequently after the tweezer and then double shooting star, it actually sent the stock lower. So as of last Friday, price has already have broken out and as of today, price has already broken out of the uptrend line. So we are seeing an immediate downside to the support zone at $1.60. All right, so that's all for me. So I think I'll pass the time to Paul. Thank you.
Yeah, thanks, Viren. I'll move on to SATS first quarter 21 update. It's just it's not an update. It's just an update. They don't do quarterly results, so it's not a full set of results. Anyway, just some key points. I think as you can see from the revenue numbers and the losses, it's obviously a really tough June quarter. In terms of the positives, the bullet point on the right, you can see that despite the government grants, which was, you can see on the table, I have about 61, almost 62 million in government grants, or the GSS, they still managed to lower their staff cost by 1/3. So that's the positive. I mean, not positive that you lay off staff, but at least you have to restructure in line with the decline in revenues. So the number of employees declined by 20% year on year. The other positive was cargo is stronger in view of e-commerce and so forth. But when we say stronger, it also means it just decline less, which is it's still declining 50%. So when you say stronger, we're talking about relative sense. Because as you can see from the revenue, for instance, the food solutions, meal volumes dropped 95%. I mean, almost gone to zero, and passengers tumbled 99%. So it's like relatively bad, I guess. In terms of the negatives, also SATS was the one that dragged down, was a big drag on earnings or losses. As you can see from the table on the left, the decline of the losses sunk from 14.6 million profit a year ago to a decline of 31 million. So there's a big swing in losses, into losses. The biggest drag was China, and one of the reasons given was that the closure of Beijing Daxing Airport. You know, this is the largest airport I think in the world, and they had to close and rely on the other, and because there are two airports in Beijing, so they rely on the other older airport. In terms of outlook, was that the free cash flow in first quarter was a negative 71. Of course, this excludes the 61 million government grants. But if you use that as a base, that's a back of envelope, and with the cash they have about 700 million, or a net debt only 152, they can kind of ride out for the next 10 quarters, even at such similar burn rate. I think SATS is obviously bottom up operationally. I mean, when you're down 99%, the only way is up. But we still have a sell call on it. The two main reasons I think that we mentioned before, we just don't have any visibility. It's unclear how steep the recovery will be. Maybe it drops 99 to maybe drop 80%. So it's still going to be quite a severe decline and in losses, and without any dividend yield and the net losses to persist. Bullet point number 2. So we're just going to use price to book. Our target price is a bit aggressive, 195, because we're using the global financial crisis kind of average levels. But we still have a sell call on it. I think without any clarity or any sustainable or material improvement in air travel, we are still avoiding this stock. Next slide. Anyway, this is the chart right now. So it's like almost zero. I mean, so passenger carry, like we shown before, it used to be almost 2 million a year ago. Now it dropped to 17,000. So our point is, even if it recovers to 200, 300,000, this company might still be running quite heavy losses. Likewise, as you can see for the Changi Airport. Okay, next slide. In terms of Clearbridge results for first half, and before I go back to the previous slide, just a disclaimer, do note that we do receive compensation, monetary compensation for the production of this report. It was previously under the stock facts, but once the stock facts was over, we still continue to have paid research. In terms of the results, you can see on the revenue line, it tripled from 6.8 to 21.4 million. The big chunk of the jump came from, as you can see from the table, the REIT table there, the 12.69 million. It used to be 1.8, so it's almost a 6 times jump. And part of the reason was that they acquired 9 dental clinics and also the COVID test kits. Anyway, sorry, I think I should just go to the positives. So in terms of the positives, the revenue was driven by the 9 clinics that they acquired, and also they distributed the antibody test kit by Biolytics. Do note that they have not disclosed how much they sold, but Biolytics themselves sold about 6 million. So you can I mean, we're just assuming a large chunk of that went through Clearbridge. So a large chunk of the growth in revenue, I'm not sure, maybe 6 or 7 million at least came from came to Clearbridge itself. There was positive operating leverage. So even though revenue tripled, the employee expense, sorry, it's not in the table there, but employee expense only rose 14%. And so they were able to sell the test kits based on their own existing marketing network, and in their offices in Indonesia and also in Philippines. The negative is the pandemic was very severe. I think we should do a chart later, especially second quarter. Several businesses were hit. For instance, the IGM Labs. IGM Labs is what, for those who, if you can't, just to recap, IGM Labs, what they do is that all the public hospitals, not all, I mean, quite a number of the public hospitals in Indonesia, when you want to do any lab tests, it is run by Clearbridge under this company called IGM Labs. So obviously, when the pandemic hit, the number of patients that goes to hospital just drops. Likewise, you will see of course, in dental and aesthetic, if it's an elective, I mean, I don't think you're going to do Botox or any aesthetics during the lockdown. So obviously, all this did hit them. But I think the recovery will return in the second half. So in terms of outlook, we do expect a stronger second half as the lockdown eases. The one unit that has a stronger, at least circular growth will be the TMJ. Again, TMJ is another. Is what they do is that patients that need kidney dialysis is run by them in the hospitals. So they under this company called TMJ. So they have 23 facilities and another 13 more that is just waiting for renovation. So that will give them the structural growth. So we maintain a buy, and I think the good things that they are expanding and leveraging their network from medical centers throughout ASEAN, namely Indonesia and Philippines. And with the stronger operating cash flow, I guess sorry, I missed that, the bullet point, the second bullet point, in the first half, they generated operating cash flow 4.5 versus minus 3.6. So with that, they can grow more via acquisitions and of course expand their Indonesian operations, because when you run a lab and you run, you need a bit of working capital, because your trade capital actually comes from the government, and you know they might be, they probably they take like 60 or even 90 days to pay. So you need higher working capital, and with the higher cash flow, you can actually grow faster. And these are industry numbers. These are not the company's numbers, but just to give you a flavor of how bad the decline. So you can see that in the second quarter, the number of dental patients in Singapore dropped 76% year on year. Obviously, this is the peak of the COVID, the April lockdown and so forth. Then in terms of Indonesia, you don't get hospital patient traffic number. But if you just look at Siloam, I think Siloam is one of the largest, I think the largest listed, and also, you know, they are part of the first REIT. So you can see that in the second quarter, the number of patients in Indonesia, inpatient means the number of patients who use beds. That means they get treatment inside the hospital and not outpatient. So that dropped, I don't know, almost 44% drop in the second quarter. So in that context, I think Clearbridge has done pretty well, considering the number of the collapse in patients, you know, in Singapore, Indonesia, and of course even Philippines. Okay, I'll quickly run through our usual weekly update. So in terms of the Singapore, again, just a refresh, we will just pick out whatever are the big macro news in the market that we can. I mean, there could be some more, but we just pick whatever is relevant, especially for Singapore. So for Singapore, some of the numbers that came out was industrial production. It was actually down. I mean, not a good set of numbers considering it was two consecutive month of decline. But again, part of it is the volatile pharma. Pharma can jump up 30%, can jump down 30%. So it was down 30%, but electronics was still holding reasonably well, considering it was only down 2%. The other key macro news that came out from Singapore was the CPI. Obviously, we all watch CPI is because it will kind of help the MAS monetary policy, which is how they view their currency. So obviously the decline in CPI or inflation is the worst in GSE, but is within the MAS -1 to 0%. So every 6 months in October and February, the MAS will come out and talk about what is their monetary policy. Basically, how they're going to move the exchange rate. So anyway, we don't think there'll be any changes. What they normally do is they will move, as you can see from the point there, they will either move the slope, it's higher, steeper. The general policy is appreciation, then they might actually widen the width of the band, or the big one is to recenter. That one hardly happens unless it's quite a big crisis. So, but I think we don't think there'll be any change in their policy in October. The other interesting macro news for us was the property transactions. So although URA has not come up with the August number, but because we have released numbers, so we can actually see what's happening in August. So August is actually another strong month of property transactions. So probably this is the third month of like 1,000 units or more in terms of transactions. So year to date, surprisingly, the number of properties sold is actually up 3.5. Again, these are units, so we don't have the value. So some of these may be mass market and so on, but in terms of number of units, surprisingly, the property transactions are up 3.5% in Singapore. Of course, the other news is the big one, which I think Timothy has touched on, which is the US change in the way they view how they view interest rate and how they view inflation. So the key thing, I think, like Timothy elaborated, is that it will be average inflation over time. The thing is, they never elaborate what is the average. Is it 1 year, 2 years, 3 years? They just mention over time. So your guess is as good as mine. And the other point is that, again, this is a bit more academic, so just bear with it. Is that they want to see employment. As you know, the Fed has two mandates, employment and also inflation. So for them, maximum employment is the more important goal, because when you have employment, it's more inclusive. So you can actually get those that had difficult time finding work, the poorer poorer people and so forth, to get them into the labor force. So you need to stress them. To them, employment is a bigger goal. And then the third key point is there's no preemptive hike. So in the past, no, they try to be, I wouldn't try to be clever, but they try to preempt and think that inflation is coming, then they will start to raise rates. But right now, they won't raise rates until they see inflation averaging 2% over time. Later, we talk about the briefing on some of the briefings that we attended, these three companies. In terms of our tactical views, if you are playing the recovery trade for phase 3, I think our preferred pick is still in transport is Comfort. We are still avoiding international travel for now. I think that's why we have a sell on SATS. The other interesting thing for us is the Singapore property developers. I think if the property sales still can hold up like 1,000 units in September, again, we really can't say, but if it still holds up in September, October, then I think the developers could do well, considering they are also starting, their land bank is also starting to dwindle. If they actually can hit 1,000 and 2,000. Do remember there's about 30,000, the number of units available for sale, I think is have been coming down the last few months. In terms of events, I think it's the usual. I won't bore you so much, but do note that our usual poems webinar by listed companies. So these are the numbers. These are the companies. Straits Trading, First Ship List, Comfort Delgro is also coming. So if you want, you can just register here or wait for Stocks BNB WhatsApp alert. Not all have been in the poems yet, so give us some time to lodge them. So don't be frustrated if you click on the link and you can't find all this. So give us some time to try and log in, because we need to get the companies to give us the overview of their presentation. But they will definitely present. Okay, anyway, this is our usual. I mean, these days we always have to do this every week, watching the COVID. But I think the trends are still the same. The only good thing is that you can see globally the number of new cases has been flattening out. So you don't see any new surge. I think partly helped by US numbers in Beige, which has been coming off the peak and hopefully continues to trend down. The chart on the right, just a reminder that second wave can happen. I think, Italy was the most troubled in Europe with 5,000 cases at the peak. But right now you can see the red line, Italy has started to come back up again, 1,000, likewise for South Korea. So this thing will come in waves, although it will not be as high as the previous peak, but second wave, third wave may happen. Of course, the most important for us is Singapore. I think yesterday was 8 community cases, so I didn't put in the data because it was already out. But so anyway, for Singapore, it's still the numbers are still good. More important again is the red line. So the community cases is 2. So this sets us up quite good if we continue to have only 2 for moving into phase 3 or further easing of phase 2 before we move to phase 3. I think this is just for macro. I mean, if you want, just for reference in terms of industrial production and how the NER is the Singapore exchange rate, the weighted basket, how it trends quite close to the CPI. So the CPI is quite a pretty important indicator used for them. Of course, they look at growth and so forth, but if the CPI continues to trend down, so there's more room for them if they want to kind of don't have to appreciate the currency so much. As you can see, the blue line is always above 0. So it's always, Singapore is always on, the general policy is always to appreciate the currency. Of course, how steep and all depends how the economic cycle is. Okay, and it just to put some data, wherever we say, we try to have some data behind it. So as you can see, the blue line is just the monthly sales, new launch sales, and the red line is the average in 2019. So what we're just trying to say is that the last 3 months has been really good. It's hitting, the average is about 1,000. So this is much higher than the 800 that we got even last year. So if this continues, means we're actually going to the number of units sold is going to be even higher than last year, which is obviously good for the market and helps to clear inventory. Again, okay, if you are those who want to look at interest rates from the US, probably there's only one chart to look at, and this is the chart. So this is the chart. Of course, okay, for just a refresh again. So for the US, the Fed will look at this thing called the core PCE, personal consumption expenditure inflation. Again, it's a mouthful. Let's call it PCE. So obviously, you always have the core CPI, but for the Fed, they will normally just look at this. So if you want to know what is interest rate, I think this is the only chart to look at. So the blue line, the red line is the 2%. So this is the target that the Fed wants. So the Fed in the past said that when the blue line touch, which is the inflation number, when the blue line touch the red line, it's time to tighten. So right now, what they're saying is 2 things. Firstly, it can go above the rate, because what it says is that it's the average, so it's not the target. And secondly, it's an average. So I'm just using the 12-month moving average. So that beige line that you see needs to cross that red line and it has to stay there for quite some time before the Fed even thinks about raising rates. Of course, there are other implications, but we don't go too much on it. But basically, that's the general rule. So you can see that inflation is still trending down, especially the beige line, and it's still far from the 2%. Okay, anyway, this is Phillip on the ground. We only do this when we, when after the results season, because we don't want the meeting to drag too long. So as you know, we always have, we do attend, the research team, we do attend briefings. Of course, some of the closed door ones we can't mention, but at least for those where there's an analyst briefing. So these are some of the events that happen. Again, we don't cover these stocks, so hopefully you don't ask us too much on our recommendation because we don't cover, but again, because some of these meetings, the investors may not get access, so we just try to share with you. So obviously we had the Top Glove that did a poems webinar with us. So in terms of the key points, I mean, it was a 1 hour meeting with almost 50 questions. But some of the key ones is that the prices continue to rise. So October, you can see the first bullet point, the prices have been rising since March and it's still rising. In October, the prices for glove is up 25% month on month, then 30%. I think you can see for yourself. And the lead time is about 590 days. I think almost hitting more than 1.5 years. So you order glove now, you wait 1.5 years. The other thing is that plaguing the stock was as you know, they sent a shipment of gloves to the US and it was embargoed by the US customs because of human rights issues or claims of human rights issues. So anyway, they already announced that the report is out and is complete. The audit is completed and they should send out the report in 10 days. So then they will submit it to the US. So this is positive for the stock. The other thing is a lot of questions in our webinar was on vaccine. Obviously, the question nobody can ask, I don't think even management can answer, is what is the normalized profits after once you find a vaccine and everyone has been vaccinated. But what he did say was that, of course, vaccine takes time. And the other thing is that even during the past scares, like H1N1 and so forth, demand continues to rise. I mean, demand might plateau a bit, maybe 1 year, but after that, it will continue to rebound and it doesn't contract. So this is from previous episodes of health, and the big growth now coming is from emerging markets where, like China and India, where the use of gloves is very low. So these are the new growth drivers. The other meeting, I don't want to keep this meeting too long, but I'll quickly run through. So the other meeting we had was Fuyu. As you know, Fuyu is a plastic molding company. The revenue was down, but the profit was actually flat. So that's quite a good number. And considering that they had to close, so in the first half, a lot of these electronics company had to close their plant. So like in China, the additional closure, Chinese New Year is 1 week, but they had to close another 3 weeks in the first quarter because of the whole pandemic. Then Malaysia also had to close 2 weeks. So the profit actually held up well despite all these pandemics. In terms of the outlook, again, we don't cover, but I think this stock is all about dividend yield. So I think they can still maintain a 6% yield. Last year, they paid 1.6, which is a 12 million cash payout. But in the balance sheet now, they got 100 million. So I think you can calculate yourself. They obviously can afford to pay that 12 million. Considering the first half, they generated 14 million. The earnings, again, they never disclose, but it will probably be flattish. But the only thing is that they are closing, actually they close a lot of their China plants. So they're closing Shanghai and Chongqing. So this will kind of put a drag on revenue, but maybe not on profits, because probably these two plants were loss-making. Move on to the next. Oxley, again, this is a very complicated company. We don't cover, but just let you know what happened. So they lost about 300 million, roughly, in the second half. A lot of it was a lot of write-offs. They had fair value loss. Some of the investment properties had to write down. They sold their associate Galliard and they lost 100 million. But these are not actual cash loss, because I think they actually lost only maybe 20, 30 million. Because when they bought it, then the price shot up, then they had to revalue upwards. Then recently, when the thing collapsed, then they revalue downwards. So it's not really an actual, almost like cash loss. It's almost like a paper loss in a way. They also had some loss on the 30 Raffles Place. Okay, in terms of the outlook, a lot of it is very quickly. A lot of their new projects are overseas. So they got one big project in Ireland, 1 billion, London, another 600 million. So I mean, if you think all their projects can do well, then maybe you'll be more upbeat. And then they have another 2.1 billion of revenue. That means projects that they have already sold. but haven't billed. I mean, they haven't recognized in the P&L. So, so in terms of a general view is that the issue for them is basically in our own view, looking at the results, is the interest expense. So even though they have a 1.2 billion of revenue, gross profit is only 200 million, and I think obviously you can calculate yourself, more than half of it goes to interest. So because they got a 2.6 billion net debt, so they need to de-gear, and if they start to de-gear and their property launches do well, then it will be obviously very positive for them, because 150 million of interest, and once you take that out, then you have another 50-70 million of admin expense and operating expense. So what flows down to the bottom line is pretty small because of the huge interest expense. And maybe these are just some sharing we want to just discuss with everyone in case any of your clients or you may have the stock. Next slide. I think that's the end of our. Yeah, I think that's the end. So thank you everyone for attending. We will try to please post any question that you may have, and the analyst will try to help answer. Thanks again.
Hello. Okay, I think the most top-rated comment right now is from me. The question is, will the three banks continue its downward trend, or is it stabilizing? I think that's whether it is stabilizing. Okay, so for right now, I did check with Wei Ren lah, so our TA expert also. So what happened is we think that currently it looks like the chart is trending, so similar to the movement that we see in STI itself. However, if you think about underlying whether there's any cause for re-rating, generally I feel that right now the banks are mostly quite fair value, so there is definitely upside, not upside, sorry, there's definitely it is still a good pick to if you think that the banks will recover out of the COVID-19 moving forward. Yeah, so however, if like Weiren say, there is some pressures on the downtrend from STI itself, yeah, it may cause the banking stocks to go down also lah. Yeah. So that's our take. And I'll also I'll also be adding the link to the Google document shortly. So yeah, that's it from me.
All right. Thanks, Wei Guang. So okay. So the next question by Shirley is, can we buy city development? I mean, Capital Mall Trust, Capital Land, Wilmar, and Thai Bev. So Wilmar, I raised shared earlier on my slide. So Thai Bev, yes. I think based on my last, I think Thursday or Friday report, I can't remember. So Thai Bev, yes, there is a bit of upside, but today when I look at the chart, and last Friday when I look at the chart, right, there is some sort of lacking in the price momentum. So if we look at the volume on, let's say on 17 August, there is a very huge spike in volume, but it did not bring the price past above 0.670, despite of having a high volume. And then for now, right, I think Thai Bev is ranging from 0.610 to 0.620. So Thai Bev, we need like I mentioned in the report, that there's an inverted head and shoulder. So for Thai Bev, we need to break 0.650. Okay, so move on to city development. City development has been testing the support. It has a very strong expanding wedge formation. If you look at it, you can look at my past report. The expanding wedge is still valid. So city development did have a upside today after rebounding from the support level at $7.76. However, I think in order for the the upside to continue, I think $8.49 need to be broken in the midterm. So if it's still for the next, like maybe 4 or 5 period is still ranging below 8.49, then I think city development will more likely to be ranging between this period. All right. So the next question, Capital Mall Trust, I'll answer that due to time constraint. So for Capital Mall Trust, let me pull out the. So Capital Mall Trust actually has a best performance among all the stocks today that I observe. First of all, it is currently breaking the neckline resistance or the double bottom, which is observed from 1.89 to 1.81. So, but the next target, so the next target I'll be seeing is will be at $2 and $2.01. So once that level is broken, then we can see that Capital Mall Trust testing $2.12, and then so on and so on. Okay, so with that, I answered my question, I think. So let me check. Okay, so for Wilma, okay, yeah. So yeah, thank you, Shirley, for your question. And then for next one, Silver Lake. Silver Lake, interesting. Silver Lake has been on the downtrend since I think 2 years ago. But Silver Lake, and then recently it has rebounded since May, and then July was the strongest rebound with the highest volume. But however, there's a potential harami pattern in 0.320 to 0.310. So if that harami is formed today, I think there will be a downside to 0.280. I mean, the potential rebound will be happening at 0.280 to 0.265. And then long-term target, I'm seeing 0.355 to 0.380 for Silver Lake Assist. Thank you. Then for Fraser Center Point, Evan R's is approaching resistance. Yes, it is, but do they? If you look at it, all right, that $2.53 the resistance level. Now the immediate resistance level is kind of like you need to break it. So and then $2.62 as well. So but I'm still observing a long-term target at $2.80 to $2.90. I hope that answers your question. Thank you. Then for UG Healthcare is going down. Is there any potential sell off? I think UG. Okay, UG Healthcare, like I think last week or 2 webinar ago, I think while sharing with Paul, I think I say that once $2 to $2.30, the support zone is being supported, I think there will be still an upside. But however, I think that that may be a potential of a forced breakout to the downside to $1.64 to $1.83. Like I shared previously, I think the 5-wave, the 5-wave impulse has been completed, and then now we are in the ABC corrective phase. So the C wave maybe has been completed or not. It depends whether $2.50 broke or not. And then if $2.50 does not break, and then we'll be seeing the C wave will be extended to $1.83 to $1.64. All right. So I hope that answers your question. Thank you.
Hi, for me, not much updates for Mapletree Commercial Trust. I think their last communication was for the first quarter results, which was due to different financial year ends. Their first quarter was for the period ended June 30th June. Yeah. So for them, I think portfolio occupancy wise remains quite high. As you know, VivoCity is the asset that contributes the most to their revenue. So the occupancy for VivoCity is still relatively high, actually 99.1%. So 99.6. Oh no, sorry, 98.3%. So still relatively high. I think this is because MCT actually offered one of the highest rental rebates for their tenants. So this should bode well for the tenant stickiness as well as help the tenants with their planning. So I believe that this higher amount of rental rebates offered to the tenants, tenant support would be viewed positively by their tenants. So in terms of their other buildings, which are the office buildings, their fringe office buildings like Mapletree Business Center 1 and 2, PSA Building, Mapletree Anson, occupancy is still relatively high. The lowest one was for a PSA Building. In terms of their shopper footfall and their tenant sales, actually for them, because there's a portion of their shopper footfall as well as tenant sales, they are attributed to tourist sales, or rather from tourist receipts. However, as we know, the borders are still closed, so this is weighed down on their shopper traffic as well as tenant sales, which are still about 78.5% and 63.4% down. So shopper traffic is down by almost 80% and tenant sales down by almost 63%. Perhaps Paul might want to take the next question on Clearbridge.
Yeah. Oh, sorry. I was checking. There was a question on Thai Beverage, so I was just trying to look at the data. Okay. And I'm not sure. There was a question on Thai Beverage. Any updates? I believe. Okay. Sorry. Just give me one quick second. I think someone answered it. Okay. But anyway, there was an update on Thai Beverage. We were checking the recent data. Actually, I should have included it. So in terms of the consumption for in July, in Thailand is actually up about I think 17% or so. So there's a rebound at least in the liquor consumption in Thailand. Sorry, give me a quick second. Okay, the only thing is that I think the only in terms of the only fear I have is maybe the politics that's happening right now. So that's the only concern that I have, which I can't predict it. I mean, nobody can, but that's the only issue that kind of worries me. But in terms of the volume, the numbers it's actually very strong. July numbers is up 17%. So we do see a strong recovery in alcohol consumption. But how this politics develops, I'm not sure. That could be the only thing that could be on the stock. In terms of the next question, is Clearbridge, let me just read it out. Is Clearbridge in talks or already with countries that have a presence to help administer the COVID-19 vaccine in the population? Will it bring about significant improvement to the revenue? I have no idea if this will happen, but the only thing is that, vaccine is probably every country's is very strategic and very national security item. So I'm not sure if they're going to use a private company to administer vaccine. I'm not sure if it happens. Of course, it's good for Clearbridge, but I would presume if you're going to administer, like how most governments vaccinate the population, they probably might use government authorities or government hospitals that have the distribution. And this is a high-level national security agenda. So I would presume they would rather use government security. But I do not know. Maybe if it happens, then that would be good for the company, obviously. I'll quickly run through. There's another question, I don't know, that has been clicked as answered on Thomson Medical. We don't cover Thomson Medical, but the reason why they ran into losses was, let me try and look for the question that someone clicked as answer. Okay, the reason why they went into losses was because of the Johor hospital. So what has happened is that they're trying to build a 500-bed hospital in Johor Iskandar, and of course with all these developments, they decided to write down, I think, 90+ million on it. I think even if they don't write down, when you set up a new hospital, the only thing you're going to get is loss for the next 3 to 4 years. So even if you don't write down, so they're going to weigh heavily on the results. But anyway, just to help answer that question. I'll move on to you, Viren. I think there's a lot of technical questions.
Okay, Paul. So the next question, I think for ISDN not much. I've seen the chart just now. So ISDN has a slight correction after a divergence happened on the 24th of August, which is like maybe last week. So price has been steadying, going down, but like today there is a bit of upside at $4. 0.42 cents. Resistance level, immediate resistance level is at 44 cents. I think 0.405. I mean, and then I think if you want to look at long term, I would say that I think there's a tendency for ISDN to correct itself as 0.340 to 0.360. Reason why is because first, I think since the rise from March, I think the 5 wave has been completed. And then we are looking at ABC corrective wave downside. But however, that if 0.445 and 0.475 is being broken, then I think that there'll be a strong upside. Then for Union Gas, I think recently has been exploded. The stock has exploded tremendously, but I can observe that there's a downside. I think immediate target for the downside is 0.350. So that's for Union Gas. I think the strong upside of the demand has dried up. So that's why we observe a steep correction down for now, right? So I hope that answers your question. And then for Biolytics, I think will be I think biolytics will be ranging for a period of time. Since April, it has a very spectacular rise to 0.875 region, but I think after that it went back to the demand area at 0.300 to 0.320 in July, and then after that I think prices went up, but not for very strong. But I think that there's a tendency for a long period of ranging. I think there will be a lack of bullish or bearish momentum for biolytics. So that's for now. So for IX Pharma has a really rising wedge, a corrective pattern. So currently price is start testing the lower bound of the what do you call it, the rising wedge. So it's testing at 0.260 to 0.265. So I think there will be a slight upside, but I think in the long term still on the downside until 0.225. Then that will be the grand rebound region. All right. Okay, so I hope that answers your question. Thank you.
There was this question on why NEO dropped today. We don't cover though. I mean, we just read as much as you do. I think it's just that they're entering into the property business from catering, food catering. I don't know. It's like SATS announcing going into property development. So I guess maybe that's how the investors are reacting. The next question, the US consumer core PCE, is it a year-on-year percentage change or not? Absolute inflation rate. It's the year-on-year percentage change. That's how they normally look at most of the data. They seldom use. Month-on-month is too volatile and very seasonal. Right? Probably Christmas time, the thing will just spike down. So it's normally year-on-year. Okay. The other question. I have SingPost in my portfolio incurring losses. Do you think I should cut loss now? Okay. Let me just give you my view. Again, we don't have a recommendation. But I think SingPost could probably be, there could be a turnaround coming. I think you probably, again, seen the worst of the worst. The worst is, of course, the main problem for SingPost is the letter business. Obviously, nobody is issuing sending any letters. But so that one you cannot have offset. But what is good for them is the e-commerce business, which they obviously there are issues with e-commerce because this is going to be a very long answer, but let me just cut it short that they are trying to resolve these things. So some of the things they're going to do, they're going to roll out in HDBs, whereby instead of every individual unit having a post box, then everyone go in and open your own. You actually have a common. Then you just key in. Then they will just the postman will just load all the letters in one common area, and everything will be kind of like distributed, so that when you want your letter, you just key in your code and you will get it yourself. So it's like on demand, and it'll be easier for the postman. And also the new post box letter box will be bigger, so that you can even send parcels to you. So anyway, in conclusion, what I think is that the worst is over, and I think from my own perspective, it looks interesting because don't forget they are also doing Alibaba business. So Alibaba will use them to do wholesaling of parcels. So as ironic as crazy it may seem, that if a parcel from China to, let's say, Russia, they actually go through Singapore, then go to Russia, because Singapore can accumulate and it's cheaper because there's a lot of those postal arrangements. So my thing is, it's not like a SingPost where a lot of the businesses are in structural decline. This one, like SPH, I mean, for SingPost, there are some new growth areas, especially e-commerce. So I mean, sorry, a very, very long answer. Yeah. I'll just move on. Yeah, because I mean, there are a lot more points, but I think just to cut short this. So for me, I think it looks interesting for me, SingPost. Yeah, the worst is kind of over at least. Next question, I think, is that yours, Natalie, or MLT?
I'm not sure if that's my question. A fair price to enter MLT, but sorry, we don't cover it, so we don't have actually a intrinsic price. So we don't exactly have a fair price or fair value for MLT.
I think there are a lot of TA questions. Let us just try to quickly run through some of the non-TA. Can you answer the one on CDL, Natalie?
Sure. So for CDL, we actually have a buy on CDL. Our target price is $10.68. Last price, I believe, for CDL was $8.80. $8.08. So we do think that the CDL is actually trading at a substantial 30% discount to NAV. So this is attractive in our view. The property sales have been, it shows is relatively optimistic in our view. As Paul has mentioned just now, private sales for Singapore has been steady at around the 1,000 unit level. Of course, the downside, or rather a headwind for CDL would be their their hospitality business, which is a global hospitality business, so that there might be some drag over there. But overall, in terms of NAV, still trading at very attractive discount. I believe that just now we already mentioned that from a TA point of view, the immediate resistance level will be $8.46, if I'm not wrong. Yeah. But from a fundamental point of view, we do like CDL. Thank you.
Yeah, we'll quickly run through some because we don't can you comment on Franken Group outlook? If you guys want TA, just type the word TA. Otherwise, if not, then we would think it's a normal question, fundamental question. We don't cover her. Sorry, this one, they hardly meet anyone, and so we don't have much visibility on what they're actually doing. Okay. Let me just try to look through. The other one is the US consumer core PCE target 2% is actually the percentage year-on-year change. Yes, that is right. The target set by the Fed is 2%, but now not the absolute number. Now it's an average number. Basically, it gives you more leeway to go to cross the 2. Okay. The rest all I will pass it on to you, Rayron. Okay, there's one more last one. When you have time now, we let Rayron answer first for those. There's a DBS question at the bottom. Rayron, we pass on to you those TA ones.
Okay, thank you, Paul. So might ask AM any chance to go up to $2.40? I don't know, is it a typo, but currently AEM is trading at 4.10, so 4.07. So I don't know if you would like to. I will need to clarify with you again. So I'll just type in the chat.
Just assume.
Yeah, thank you. So is Capital a good buy at current level? Based on the technicals, I think Capital, if you mean BN4 Capital Corp, I think Capital right now I will stay away from it. Yeah, because it's still below it has really officially broke off the multi-year support, and then after that it has been trending downwards for now. All right, so just for the sake, I just want to see. Yeah, I think Capital is on another round of sell off today. Right, thank you. So Chris asked, can we have a TA on CNMC Gold Mine? I think CNMC Gold Mine is very, very packed to the price of gold. So if gold go up, then CNMC Gold Mine actually will have a very strong upside. Oh, let me pull out the chart. So I think I have the chart just now. I think, yeah. Okay, so CNMC Gold Mine currently is based on the technicals. We currently have a falling wedge formation on the upside. So it is kind of like very indicative of a bullish continuation pattern. And then in the long run, I think in the weekly chart, I post analysis on my own before. So I think CMC Gold Mine will in the long run target 1.618% of the whole range. So it's around 0.465 in the long run. I mean that's of course it should go price rise further. And then another thing to know is that I think last Friday has a strong rise after it came out as support at 0.285 to 0.295 region. But however, today there's a strong gap up, but there's a little bearish candle. So I think if the bearishness of the stock persists, then we will see the stock move on to 0.250 before a rebound. Okay, thank you. Street Trunk, I'm not sure about that stock, so so that one I won't be covering. Yeah, so thank you. So Copper Z asks KUO is it? I tried to search for the stock on my account just now, but I couldn't find the stock early on. So I will just go on to next one. CNMC I've got done, but due to time constraint, I think Progen, I'll start on Progen. So Progen also very corrective pattern, but it has been on a very strong downtrend since 2013 August. Whether we break upside, I think there is a very strong low chance, because first of all, there's a descending triangle on the upside. I mean on the upper bound of the trend. So if there's a strong possibility that 0.041 will be broken. So once it's broken, then it will test lower at 0.016. Okay, so because of the descending triangle, and plus today there's a very strong sell down after it gap up. Okay, so that's for Progen. SPH and ST, I think SPH is still on the downtrend. I think even there's an upside, I think that 1.112, 1.113 will be the next selling resistance level. Alright, ST Engineering. ST Engineering is on a corrective channel. Okay, on the downside, I think today it has a very strong bearish candle. So I think the next rebound you're looking at will be at $3.31. If you want to look at it. All right. So I hope that answers your question. Hong Kong Jardine Cycle and Carriage. I think Jardine will be very bearish stock. I think compared to I'll take the chance to say about Jardine Matheson, that which I shared last week. I think Jardine Matheson today has a very strong bearish candle after Harami pattern that happened on Thursday and Friday. So I think I mean the inverted head and shoulder, which I posted in my report last week for Jardine Matheson, is still ongoing unless the right shoulder has been broken. So back to Jardine Cycle and Carriage, I think ever since it broke out of the ascending channel, corrective pattern, I think we are looking further downside to $17.64 for Jardine Cycle and Carriage. So Hong Kong land will be very much ranging for now. Okay, so there's also an inverted head and shoulder pattern, but on the upside is kind of like is lacking the momentum, and is forming more like a corrective pattern of the bearish pattern. So it's like a corrective within a corrective. So unless the 4.49 breaks, then we can see that there will be a strong reversal for Hong Kong land. Copper. So in near mid-term unit gas after correction to a certain level can uptrend again. I can't promise for that, but let's see how is it. So we got to see what's the technical showing in the near term, in the future. All right, thank you. So let me see any okay. For TA clarification, are you sharing the chart? Unfortunately now, because for now we are on the shared computer, because compared to my US one is personally by me, so I can share the chart live. But for now, I think it's very hard to share the chart for now, because we are on different hosting platform. Right, so sorry. Thank you. Okay, so I pass back my time to the rest of my analysts and my colleagues, so they will answer a question, and then I see further question. Just upvote it, and then I'll answer it. All right, if there's any more TA question. Thank you. Paul and
yeah,
do you
try to do a few more, then we try to end it at 12:40, because I think Biren has another seminar at 1. I'll quickly run through mine before I pass it on on the DBS. Is it advisable to subscribe to Sembcorp Marine REIT, since the O&G sector is on a constant downtrend? It's not only the downtrend that we worry. The other thing, I think, like we've highlighted before, there is the as a refresh. After this whole rights issue is over, all the Sembcorp Sembcorp used to own Sembcorp Marine, right? About I think 70%, if I'm not mistaken. So what happens is that once this rights is over, Sembcorp Marine just going to give back all their shares to all their Sembcorp shareholders. So as a result, in a nutshell, once the whole rights issue is over, there'll be a lot of Sembcorp industry shareholders holding Sembcorp Marine, almost 30% of Sembcorp Marine shares. So we just worry that even after the rights issue, there could be a lot more selling coming on. So I hope that kind of answers you why the risk. I'm not saying don't subscribe, I'm saying there's a lot of risk to take up the Sembcorp Marine. Apart from this industry factor that you rightly pointed out, the thing is on the downtrend. Yeah, I hope that helps. Thanks. I'll move on to you, Wee-Kong.
Okay, thanks, Paul. Okay, there's a question saying for those holding the DBS shares, what is the default mode? And if they don't do anything, will they just be paid the dividend in cash, which I believe? Okay, so I think you need to know for all three banks, because I think over the past 3 years, I think all three banks have a scrip dividend. So if you are a short or a recent bank shareholder, then no problem. The default mode will be cash. But if you are a long-term shareholder, you might need to check back when was the last time whether you submitted previously to elect for shares, because you could have elected for shares in for every time in the future from 2017, and in which case that will be your default mode. Otherwise, usually it will be cash by default. So for those who are already on the who are already getting this shares using shares dividend as a default mode, you can also inform them that you want to change to cash, but that one will be more troublesome. You need to go directly to your custodian or through CDP itself. So yeah, that's to take note of lah, just in case you want to change from shares back to cash. Yep.
Yeah, I think the rest are all on TA. Vera, you want to answer them, or maybe you can push it to your 1 p.m.
I'll take the remaining time to answer some of it. So I'll select some of it because there are certain stocks that there isn't any what do you call it? Any movement. So for more of the smaller caps, that's why most of my report I don't really cover them. So I will look at Core International. I think Zach, I've answered your question via the type message. Yeah, Jamie asked, can I suggest you show THR on the counter discuss so it's more meaningful? I get it, but as I mentioned earlier on, because this is a very we are hosting on different platform within Zoom, so it's very hard for us to actually share screen. So, but we can consider that in the future. Let us see how. All right. So Samcorp Marine based on technicals is a downtrend. Yep. So I can do NDIC okay, NDIC I think it has a very strong upside today. I think it has officially broken off the falling wedge since its I think its IPO in Feb 2016. It has also official. I think it's close to filling up the bearish gap. But however, do take note that unless stock, unless the stock price cross 20 cents. If not, I think that you're still on the very corrective on the downside. All right. So do take note for NDIC. All right. Thank you. Okay, Franken. I'll do the last one, Franken, and then I'll pass my time back to my wonderful colleague. Okay, Franken. Okay, Franken currently has broke off the support. The major support is 0.985 to $1. So I think you'll currently test the next support. I think in the midterm you'll test the long support at 0.780 to 0.805. Okay, so I think there will be a corrective downside again to the downside. All right. So any upside will be limited to $1 to $1.20 for now. All right, that's for Franken. All right, so I think there's nothing much for my side. I think I'll pass my time back to Paul and my colleague. Thank you.
Can you comment about? Sorry, we don't really follow that. You don't really follow Avaga. So I can't. We just see which questions we can able to answer. A lot of it is any thoughts on AIY. I'm not sure what is it even. When will Samcorp industry shareholders sell? When can they sell their Samcorp Marine shares? I'm looking at the prospectus now. They don't really give a proper timetable. I need to check. I don't want to give you the wrong date, but anyway, 11th of September is the date the rights can trade. Maybe in the next week I will try to get you some dates if I have the time. I'll try and get you some dates. Although we don't cover, but I'll try and get some dates. So the issuance of the right shares will be on the 11th Because I think after these rights, then they still need to go through the process of allocating the rights shares to the Sembcorp industry shareholders. So I need to double check on it, so I don't get the wrong date for you. Natalie, there's one question on CMT that I think can help on this.
Hi, yeah, correct. That's correct. CT, if you can just move the page to one more before the slide, one slide before. Sorry, one slide after. Yeah, so actually you can see over here the forecasted dividend, and basically the cleanup dividends is estimation of the forecasted dividends minus the already paid out dividends divided by 2. So it's just for that quarter, for the quarter ended 30th September. Yeah. So yeah, you're right, CK. There's another question here about what are the chances of no merger for CCT and CMT? Can you express in percentage? And you mentioned it will benefit CCT. Okay, so unfortunately, I cannot comment on whether or not the percentage of whether or not there'll be a merger versus no merger. I can say that previously, after the EGM was delayed in May, things got really quiet on the merger front. But of course, the announcement today that CMT has received in principle approval for the listing of the new shares, that is definitely indicative that both REITs are pushing forward on the merger front. So yeah, so I guess we can take it as an indication that the merger will likely take place, but then again, no assurance here. And of course, so the second part of this question is if there's no merger, you mentioned that it will benefit CCT. So in a way, yes. If there's no merger, CCT, first of all, the share price will become unhinged from CMT's share price. It will no longer be trading in line with the exchange ratio and cash component. And possibly investors may actually like CCT as it is more of a office pure play. Of course, it does hold some shares of Raffles City Trust, the shopping mall trust. Yeah.
Yeah, we have also another question to put the video of the analyst. I think we will think of, we didn't want to spoil your spoil your day to put our videos there, but we will think about it. Yeah, we definitely can turn on the videos. I mean, we do that for some of our presentations too. So should not be any issue. Okay. If I don't, the rest of all TA, I don't think we see any more questions. Okay. I think we will end the webinar right now. Thanks everyone for attending, and we'll see you next week. Thank you.